The one good thing about the Federal Reserve raising interest rates. Realistically, there's probably more than one, but let's get into it and discuss what they're currently doing with interest rates, what is the objective going forward, and what is the plan to get us out of this mess that we're currently in. Let's talk about it. All right, so first off, what are they doing with interest rates? Well, they're raising them very aggressively. In fact, as of their last meeting, they raised rates by 75 basis points or 0.75%, which is 0.75%. Now, they've also indicated with their next meeting here in just a couple weeks, they will likely be raising rates once again by another 75 basis points. This is the most that they've raised rates at any given meeting since 1994. So 28 years ago was the last time that they raised rates this much in one single meeting. Now, what is their objective behind all of this? Well, it's to lower inflation. The problem is, they're using the wrong tool for the job. It's like we're at a job right now and we need a sophisticated ratchet set and they came up with a hammer and a screwdriver. Sorry guys, you showed up with the wrong tools. So unfortunately, they are showing up to the job with the wrong tools that we need to fix the inflation that is currently going on right now. So here's what's going on. In the event that we had a red hot economy, right? The economy's booming, things are going really well, then they could step in and raise interest rates and actually slow down the economy and actually lower inflation. However, the inflation that we're currently dealing with right now is not because of a red hot or white hot economy, but rather it's because they printed $6 trillion in the last 2 years. That's why we have all of this inflation. It's because we have too much money supply floating around. They need to take some of the money out of the system. It's too many dollars chasing too few goods and services. That's exactly what inflation is. Well, unfortunately, this inflation that we're currently dealing with is caused by too many dollars, not because we have a white-hot economy, right? So again, a lot of this could be also attributed to the supply chain issues that we've been dealing with for the last couple of years here. We all remember the days of early 2020, right? There was all the jokes and memes and things like that about toilet paper shortages, but I mean, that's a really good classic example of supply chain issues. Tons of demand, tons of people coming in, buying it because we were planning on being at home for a long time, right? And then the supply chain could not keep up. Well, we're still seeing that issue with a lot of different products around different stores, the grocery store, stuff like that. I'm sure if you go out into your local area anytime, you probably walk up and down the aisles of given any store and there's weird shortages of weird products, right? I know that I've experienced that in my local area recently. I was looking for something. I honestly don't even remember what it was. It was something completely random. And it's like, why are all the stores out here around in this area completely out? You couldn't find it anywhere. It's like, what is this? This is so weird. It's like the most obscure item. Honestly, I don't remember what it was, but it was something that was like so weird. And it's like you couldn't find it anywhere. So again, this is happening with all kinds of products all around right now, supply chain issues. And again, that could be leading to some of this as well that's currently going on. So the whole objective with the Federal Reserve right now is to raise interest rates to lower the inflation. But again, like I said, they came to the job with the wrong tools. They need to go back to their work truck, their work van, and they need to grab the right tools, which again, raising interest rates right now is not going to fix this inflation unless they start pulling money out of the system. They need to suck some of this $6 trillion that has been printed in the last 2 years out of the system. They need to get some of this money out of there. It's too much money floating around right now. So, going forward, what is the plan to actually fix this whole like current situation and the big mess that we're in right now? Well, the plan, according to the Fed, is continue raising interest rates. Again, more tools wrong tools at the same old job. So again, they're going to continue coming back to the job with the same old wrong tools time and time again and say, I don't know what the problem is here. I can't quite do the job. It's not really working here. Well, yeah, because you got the wrong tools. You're trying to, fix something with the wrong set of tools here. So it's exactly what's going on here. So realistically, what they need to do going forward and what this is all going to result in. So here's what will happen as a result of the Federal Reserve raising interest rates. They're going to crash the economy. It's going to skid and burn, and it is going to go down in a ball of flames. And do I want this to happen? No, I don't want this to happen. But at the end of the day, I have no impact or influence over this whatsoever. I'm just a bystander, right? I'm just sitting here watching the whole thing play out. And the people of the Federal Reserve that are supposed to be super smart people apparently can't figure this one out. Not quite sure, right? Seriously, it's so weird that the evidence is right here in front of our face as far as what needs to be done, and they're taking the completely wrong approach on this. Even Jerome Powell just the other day indicated it's going to be very difficult raising interest rates at the current rate that they are right now to bring this economy in for a soft landing. In other words, that's like the terminology that they like to use is a soft landing. You hear this all the time if you ever listen to either like Jerome Powell speak or the Treasury Secretary or any of these talking heads on these financial networks, things like this. They all talk about a soft landing. It's not going to be a soft landing. It's going to be a skid and burn, right? We're going to get our knees all scraped up with this one. Well, we're not going to, but some other people are. But the fact of the matter is, what this is going to do, it's going to crash the economy. It's going to collapse the stock market. It's going to take the whole thing down. It's going to take the crypto market down big time. The crypto market is probably going to get hit the worst out of all the markets. The real estate market's going to come down. I don't really foresee a huge skid and burn on the real estate market. I do see it coming down maybe 10, 15, 20, maybe 30% in some markets. But again, not all markets. I do not foresee that in all markets in the real estate. I do see some markets going down way more than others, but for the most part, I think crypto's going to get hit the hardest, stocks will get hit the second hardest, and the real estate market will fare best out of all the markets as far as these three going out there. So anyway, as a result of this, now that we do know that this is a very high probability of the market and the economy basically going down in flames, right? We know this is going to happen because interest rates raising at the rate that they are right now, they're raising interest rates so aggressively that they're going to overshoot. So that's what they do every single time, right? Because they're raising so incredibly fast right now, which by the way, let me just straighten this out really fast. So when I say that they're raising interest rates, what they're doing is they're raising the federal funds rate. What this simply means is the interest rate that banks pay when they borrow money overnight. Okay, that's what it means. The Federal Reserve or the Fed funds rate is simply just the interest rate that banks are paying overnight. So when they borrow money, and yes, banks do borrow money, a lot of money, right? So anyway, they're constantly borrowing money, by the way. So that's what that is when they raise these interest rates. And then again, this also translates into higher interest rates on virtually everything else. Any kinds of adjustable rate mortgages, things like this. Again, it's not all directly related, but it is a kind of an aspect of this. All of it's related to either the bond market and or the federal funds rate. And again, it all gets passed on to us, the consumer, in what we pay for our consumer debt, like credit cards, auto loans, adjustable rate mortgages, personal loans, lines of credit, all kinds of different stuff. It's all pegged to what the Fed is doing and the bond market. So when we come in for this and we take a look at what is actually going to happen here. So here's what we do know is going to happen, right? The economy's going down. We know all of this. Now, the next questions are going to be is how bad is this actually going to be? Is this going to be really swift like what we saw in early 2020, which realistically, that's kind of what I foresee, is something kind of fast, a really fast, aggressive collapse in everything. And then will it recover fast? Not really sure. That's the other question that we know right now is it going to go down and then come back up really quickly? Or is it going to go down and kind of skid along the bottom, bounce around a bit, and get all scraped up and bruised around, and then are they going to bring it back? What is the whole objective here? Here is what I foresee happening. Going forward with the Federal Reserve and how they're raising interest rates right now so aggressively, they're going to way overshoot this thing. Right now, we're not seeing all the negative impacts of this yet. But here's what's going to happen. All of a sudden, the rug is going to get pulled out from under this thing, and we're going to see a big, big drop in everything really, really fast. So that's what I foresee happening with this whole thing anyway. I would not be shocked one bit to see another situation like what we saw in early 2020. Now, I'm not suggesting that we're going to go back to lockdowns and things like that. I'm not saying that at all. I'm just simply seeing like a huge kind of collapse in the economy, the markets, all things like this kind of going down quickly. But then guess what's going to happen? The Federal Reserve is going to pivot. They're going to start cutting interest rates, and they're going to start printing a ton of money once again. Is that going to fix the inflation situation? No, it's going to make it worse. But that's what they're going to do. And then what happens from there? Then they come out with the printing press. They print all kinds of money because they do it every single time when the market goes into or the economy goes into a recession. They print a whole bunch of money and they pull out the dozers and they start plowing cash. So here's what's going to happen. As the Federal Reserve does this, and again, it's going to totally depend on how fast everything kind of rolls over and crashes and burns. Again, I foresee something kind of really fast coming in, just because at the rate that they are raising everything right now, interest rates, and the way that things are slowing down at the rate that they are, I kind of see things coming in really fast and hitting the floor quickly. But here's the thing. As soon as the Fed turns around and they start printing and dozing cash, here's what happens. It's going to be pushed out into the markets, and it's going to be pushed out into the people. So we've seen this with all the other recessions over the last 20 plus years. Well, basically the last 21 or so years. Here's what happens. For those of you that are wondering, is there going to be more checks going out to the people? Will there be enhanced unemployment benefits? Will there be all kinds of different programs like what we saw over the last couple of years here since early 2020 with all of these, stimulus checks, enhanced unemployment benefits, child tax credit payments, monthly checks, UBI, all kinds of things like this? Yeah. There certainly will be stuff like this, because here's what they got to do. When the economy collapses like I'm anticipating it's going to, and again, I am not wishing for this to happen. I'm just a bystander. I'm just here watching the whole thing play out, thinking, I can't believe that the experts and the people that are way smarter than me can't even figure this out, and they're the ones behind all this, right? It's unbelievable what's going on right now. Like, everybody sees what's happening here, and then again, they're not really doing anything. It's so weird to see this. But maybe it's intentional and they're pretending like they don't even know, right? That could be the other case too, is they want to take this thing down to bring it back down to reality. And again, that could be the case, and then they're just acting like, I don't know, we didn't know this was happening, didn't see anything coming, right? So maybe they're just acting that way. Not really sure. I have no idea what goes on between their ears. But anyway, so when they reverse, when the Federal Reserve reverses and starts to lower interest rates once again, because that's what they do every single time, when the economy's in a recession, they start cutting rates. Again, which is why they could be jacking up rates so quickly right now, is so that they have a little bit of firepower when it's time to start cutting once again. So when they start cutting rates, they're going to start pulling up the money printing presses. They're going to start printing all kinds of cash, and that's going to start distributing it out to the people once again. So this could be the time in which they may actually start up some kind of nationwide guaranteed basic income program, a UBI program, checks going out once again, just like we saw with all the other recessions that happened over the last 21 years. There's going to be some massive money going out once again, just like what we saw over the last couple of years here. There's going to be a lot of money going out. And is it going to fix the inflation problem? No, it's not. So the whole objective behind this is to fix the inflation situation. But again, they're using the wrong tools. They're not doing the necessary steps to actually fix this inflation, but rather they are doing like counterproductive measures, right? They're collapsing the economy without actually fixing inflation. That's not what we're looking for here. We're looking for a fix on inflation. That's it. And raising interest rates is not going to do it. No, they need to get money out of the system. They need to pull out their big vacuum cleaners and take out about $3 of the $6 trillion that they just printed. Probably even more than that. They probably need to take out almost all of the money that they printed over the last couple of years here. In which, by the way, I am not suggesting they take money from us. That's not what I'm saying at all. They don't need to take money from anybody in order to take money out of the system. There's so much money in circulation right now, they just, pull out their vacuum and turn it on, and they just take it right out, right? Obviously, it works a little bit differently than that. It's not exactly how it works, but you kind of get the metaphors that I'm using here and kind of the illustration to paint a picture of what kind of goes on with this. So that's all it is. Too many dollars chasing too few goods and services. That's the problem, but yet they're raising interest rates trying to fix the problem, right? So again, wrong tools. So anyway, of course, only time will tell. We'll have to see what happens here, but the good thing about this is, for those of you that are looking for more money, this is certainly going to produce more money out of this. It's going to present some amazing opportunities in the stock market, the crypto market, the real estate market, all kinds of things like this. It's going to provide some really great opportunities to get in if you're looking to buy some different things. Is right now the time? No, it is not the time yet. Things are going to go down way further than where they currently are from right now. And again, the more aggressive that the Fed gets and for longer just means that it's going to hit even harder when it finally comes. So anyway, maybe I'm 100% wrong, or maybe I'm 100% right. Only time will tell. We'll have to reference back to this video in a few months from now and see where we're actually sitting. So anyway, hope this one helps you out to better understand what the Fed is currently doing. One of the good things about it, which is, well, For anybody looking for some extra cash, well, they're probably going to fire up those printing presses. There's going to be a lot more cash going out the doors. Next, a lot of opportunity in the markets out there for anybody looking to buy into anything like this. Which, by the way, if you're interested in getting into any stocks or crypto stuff like that, I do have a link down below. If you want to use that, you can get some free stocks. If not, totally fine too. Do whatever works best for you. But anyway, I want to help you out in any way that I possibly can. So check out that link in the description. Otherwise, I'll also pin a comment as well. Feel free to check that out if you want to get some free stocks. Otherwise, enjoy your day. Subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the other thousands of videos right here on the channel. And remember, I'm here for you in any way that I possibly can be. I'll catch you again later. Until next time, have a good one, and I'll see you soon. See ya.